Good morning, folks. We'll be getting started momentarily here. All right. Well, good morning and happy Taco Tuesday to all y'all out there. It's certainly been a interesting start to the week. Had a bit of a solid start to trading yesterday, but then we saw some risk off. Fitch was also talking about some of the risks that are clouding the outlook for the US, and that certainly didn't help the mood. There's also more and more talk of trying to get rid of Powell, whether it's a criminal referral to try to remove him for what is perceived to be malfeasance or other issues at the Fed. At the end of the day, this is really just a power grab from my perspective, at least, and I don't think that it's a very good idea. I'm also not a huge fan of the Fed as an entity, but I think the kind of meddling that's happening now is more to solidify power than to do anything constructive or to bring about any more transparency. So, just my 2 cents there, but we have an interesting trading day ahead of us here. Let's get through some of these slides and then we can dive right into Bookmap. So obviously manage your risk. Make sure that you're sizing your positions in a way that accounts for the amount of money you're willing to lose. And the reason I say that is because at the end of the day, while we all hope everything goes our way, often is the case it does not. And so it's very important for us to manage that risk accordingly, meaning we're not allocating any more capital than we're willing to lose on a single trade. And the way that I do that is I don't put more than 1% of total portfolio liquidity at risk with the way that I manage my stop outs and the way that I gauge the potential volatility of the instruments that I'm trading. So a little bit about me. My trading journey started 20 years ago. I know I'm dating myself a bit, but it's been an amazing ride. I've learned a lot along the way, met a lot of great people. And I was fortunate enough to start off with some solid mentoring from folks that manage money, from folks that are self-directed traders. And that really helped me to accelerate my journey and save some of the pain that can happen early on. And that's really the reason that I got involved with doing what I do on social media and with TraderAid and otherwise, hoping to help other traders accelerate their journey, maximize the potential for reaching some level of success, and hoping to, really inspire others to do the same. If they've learned and they're becoming consistent, to help other new traders get on board and learn more about using trading as a way to generate income, as a way to get closer to financial independence, and also learn more about what makes markets work. Now, folks, if you'd like to learn more about Bookmap, they have regular educational events on the Discord. You can join their Discord by going to discord.com/invite. patreon.com/bookmap. That includes this stream every Tuesday at 9 a.m. Eastern. And if you'd like to check out Bookmap, you can get up to 40% off your first billing period using this exclusive deal. Visit TraderAid.com/bookmap. That's TraderAid.com/bookmap. With that being said, we're going to dive right into Bookmap, and on screen you can see the S&P 500 futures. And just ahead of trading today, let's take a look at the macro calendar, see if there's anything really that we should have on our radar. There's a Powell speech that just happened. It's really not important in the sense that this is just a routine Fed event. It's not a discussion about policy. The remarks were largely planned in advance, so there's nothing new there to parse. We just got Consumer Red Book, came in 5.1% versus a prior reading of 5.2%. This is an aggregate reading of consumption metrics at the retail level. What that's telling you is we're 5.1% higher in aggregate spend than we were this time last year. Some of that is going to be from inflation. Some of that is from actual increasing consumer spending. And it is a somewhat K-shaped distribution. That is to say, the top 10% account for about 50% of all consumption. So that's something that we need to contextualize when we're looking at these numbers. It's not that everyone's doing better or well. It's really that the top socioeconomic participants, the top 10% of the country, are doing really well. And to illustrate the scale of that K-shaped distribution of outcomes, the 14 richest Americans have the same amount of money as the bottom 50% combined. So, little bit skewed there in terms of wealth distribution. Outside of that, we get Richmond Manufacturing at 10 a.m. And there's more Fed speakers. You got to have more Fed speakers, right? We love having a parade of them. So the Fed's Bowman will be speaking at 1 p.m. Then we get U.S. API crude oil stock change later at 4:30 p.m. We've also had a pretty busy morning of earnings. I actually want to bring up Lockheed here because I'm looking at this thing. It got absolutely destroyed. It didn't have a very good earnings report. Last time I checked, it was down about 8% pre-market. So I just wanted to quickly check in to see how this one is doing. It's a juggernaut in the defense space. And look, you can see when that earnings release happened, there was a lot of aggressive selling pressure. So we're looking at Lockheed Martin here. The stock pre-market is down about 7.56%. So it's just modestly off those lows. You can see that here. And the earnings that they printed were a little bit disappointing. I mean, obviously investors are registering that much, but revenue came in at $18.16 billion versus an estimate of $18.53 billion. EPS, I don't think this is a misprint. $1.46 versus an estimate of $6.85. Operating profits, $748 million versus an estimate of $2.15 billion. So some pretty big misses there. And then their guidance came in soft as well. Sees full year net sales at about $73.75 billion to $74.75 billion. I believe a lot of that guidance was softer than what the market was looking for. So it's kind of that double whammy. You get that double miss on the top line, but then you also get weak guidance and even some signs of margin compression at the company. So I will say that Lockheed Martin is one that I would look at buying very big dips for a long-term portfolio, but this type of a miss is also pretty disconcerting. We're right back to some of these really low levels that we had been trading. We're basically back at the April lows. So I will very quickly bring up a chart here just to illustrate where we are on Lockheed. I'm going to actually just pull this up in FinViz here if I can. So you can see where we're trading right now, basically right back to the April lows. We're also back to some of the lows we've explored prior this year. This chart tells me to be cautious. And the reason it tells me to be cautious is because the more that you test these lower levels, the more likely it is you're going to break through them. So ordinarily, I'd be a buyer of dips in a company like this, but the earnings is a big red flag. The guidance concerns me, and the chart is not very inspiring of confidence either. So I think we need to look at some of these lower levels that we've explored previously to see where this thing may base out. It may base out just below 400, maybe around 395. If we look at that last low around August of 2023, that would be one area I'd be watching. But overall, this thing punching below the 200 week with some degree of conviction has me a little bit concerned about it. So one to watch. Certainly be interesting if it's see if it's a sign for the industry. Looking at Raytheon's earnings, it does not seem to be the case. When we're looking at Raytheon, they are down just about 1.56% pre-market, but the chart is completely different on Raytheon. If we're looking at this on a weekly chart, much more constructive. The April lows were a mere blip, and it continues to be in a solid uptrend. So it doesn't seem like it's the whole defense industry that's imperiled. And Raytheon's earnings came in pretty good. Adjusted EPS $1.56 versus an estimate of 144. Adjusted revenue came in at 21.6 billion versus an estimate of 20.64 billion. So overall, the metrics on Raytheon pretty big difference versus Lockheed. So Raytheon would be a company I'd be focusing on more if interested in getting defense industry exposure because the fundamentals and the momentum both look better. I wouldn't be a buyer right here and now because I think that the chart looks a little bit extended, but on pullbacks, the way this thing has been trending since really fall of 2023 looks pretty constructive. And just give me a moment. I'm just popping into some of these rooms here to make sure that I'm able to get any questions, comments, etc. from you all. And if you do have any questions or comments or feedback, do let me know in the chat rooms and give me a moment to get back because I'm monitoring about 5 of them right now. Good morning, Ships. Teacher, my grandma used to work at Raytheon in Dallas, and she would play some part in manufacturing the lenses for some of the fighter jets in the U.S. That's very interesting. Yeah, there's so much that goes into these programs, too. It's really kind of phenomenal to think about the level of engineering that's involved. Obviously, some of the stuff hasn't gone very well. Looking at some of the stuff going on at Boeing, at Lockheed, with the F-35 Joint Strike Fighter program and otherwise. But there are also, we would be remiss not to think back at some of the innovation and some of the pretty incredible engineering that's happened as well. So let's check on futures really quickly as we approach the market open. S&P 500 futures trading at a cash implied level of 6311.40, up at just about 1/10 of 1%. NASDAQ just about flat here, trading at a cash implied open of 23,183 on the NASDAQ 100. Russell 2000 trading up about 1/10 of 1%, similar to the S&P at 2233.60, and the Dow Jones about flat, 44,312. And Bessent weighing in on the Powell situation, saying he doesn't see any reason for Powell to step down. Now, I would agree that I think it would be a mistake for Powell to step down. I also think it would be a mistake to fire him. I think it would seriously rattle confidence in the markets. That's not something that we need. If that kind of announcement came through, that Powell was either being removed or resigning, I think we'd have a pretty big and rapid drawdown in the markets, and I think we'd have a spike in yields. And the reason I think that would be the case is the optics of that would be that really there's a lot of uncertainty. I'm trying to choose my words very carefully here, that there would be a lot of uncertainty provoked by that, that it would cause market participants globally and domestically to lose confidence. And, you know, I'm not going to say Powell's done a perfect job. I don't think that the Fed as a whole has done a very good job as a steward of the economy. It's really been more of a mechanism to facilitate upward wealth transfer. But at the end of the day, if you want to reform the institution, I think you need to take a more broad-based approach and really scrutinize the actions of monetary policy. And I don't think that's the goal of this administration. I think it's more just trying to solidify an additional grip on power, trying to bring down rates. And look, I get it. There are people that are struggling with debt at high rates. There are people locked out of the housing market because of a combination of high prices and high rates. That's something that we certainly need to look into. On the other side of it, we have a government that's spending like a drunken sailor. And that's helping to keep rates elevated, both from the Fed, but also we have to remember the Fed is not the bond market. The Fed has an impact on setting rates, but it is not the ultimate rate setting mechanism. And in fact, since the Fed started their cutting campaign, where they've cut 100 basis points from the high that rates were at, mortgage rates have gone up, long end rates have gone up. The Fed can't really control the entire yield curve the way that perhaps some might think that they can. So I'm going to very quickly pop this on screen. And this is something that I had posted yesterday, or no, 2 days ago. Time does fly. And you can see when the Fed started cutting rates, mortgage yields went higher. So the conventional knowledge that, you know, this is all two-dimensional, the Fed just cuts rates and everything magically falls into line, it does not work that way. And it's very important that policymakers understand that. I think the Fed does, but I think that the executive branch and the legislative branch still maybe require some tutoring on monetary policy because, again, the Fed's just a market participant. They are able to shift views. They are able to pull rates lower on the short end. But when it comes to influencing the long end, it's a much, much more precarious process. And this goes all the way back to the great financial crisis. You can see even back then, when they were doing QE and they were buying various tenors of treasuries, they didn't necessarily bring the whole yield curve down the way they wanted to. There were many instances where they were doing QE and parts of the yield curve were shifting higher in yields. So this idea that we simply fire Powell, cut rates, and all the interest rates on the yield curve come down and lending becomes much more juiced, I would be very cautious about that view. I think that the opposite could happen, that you could fire Powell, you could see yields pick up, and you could see more foreign exodus from U.S. Treasury holdings. So just my 2 cents on that topic, because it's a really important one for us to watch as we see some flailing at the White House trying to really distract away from the credibility crisis surrounding the Epstein files. Now it's, hey, let's talk about firing Powell. Let's talk about arresting Obama. Let's release the MLK files. A lot of distraction. And the reason I mention this, I don't want this to be a political segment, but I mention it because it affects the markets. And these headlines, even though we're seeing the law of diminishing returns, that the more, you know, Trump kind of even sets out to try to affect the markets, we're seeing the markets assign him less and less credibility. That is to say, the reaction function is becoming shorter and more shallow, which is a good thing. We don't want one person necessarily having that big of an impact on how price discovery occurs. So we're just about 12 minutes away from the market open here. And I'm going to take just a quick look at what we have after the bell for earnings. I'm also interested in that because, you know, there's always going to be some opportunities to look at some of the potential front-running trades that could happen during the market. So Intuitive Surgical, Texas Instruments, Capital One, Enphase, we've got some interesting stuff. This is from Earnings Whispers. They've got a great account on Twitter to follow to keep up with this stuff. But tomorrow after the close is really where it's going to be a little bit more exciting, at least for me. We've got Tesla, Alphabet, ServiceNow, IBM, and then even you know, less than desirable companies like QuantumScope. I'd be really interested to see how things are going over there, especially after they've had such a big short squeeze driven run. maybe some of that excitement will fade a little bit with a little bit of reality setting in. But it looked like this morning was really all about defense contractors. We also got Northrop Grumman in this morning. And we got earnings from General Motors, who said that they took a pretty big hit on account of tariff costs that they're having to eat. So I know the idea is that the tariffs are, absorbed in various different places, sometimes to some degree by the exporters, sometimes by the importers, the manufacturers, sometimes passed on to consumers. But the reality is they have an impact across the supply chain. If margins are more ample, then companies can absorb more of that if they want to stay competitive to consumers. But if margins aren't ample, they can take these hits, and sometimes they have to pass those on in the form of rising prices. So even though we've seen new car prices flat to down recently, that may be something that shifts should these cost pressures continue. And ahead of the market, we've got some big moves happening in KSS here. It's going to bring that up. And that's Kohl's. Pretty incredible move here. I'm just looking for the news. Looks like there's been some management changes at the company. New chief digital officer, but I'm not seeing, let's see. Goldman made some adjustments to their outlook on Kohl's as well. But I must be missing something because I don't see exactly why this enormous move is happening quite yet. I'm going to continue looking because it's up about 60% pre-market and it's hitting a lot of scanners. I imagine we might see a sell at the open on this thing. And in terms of the metrics of Kohl's, let's just look at, okay, so the float is 49% short. That's insane. It trades an average volume of 8.86 million with short interest of 53 million. So it would probably take about 2 trading weeks for this thing to really see a cover. So it definitely feels a bit squeezy here. This one had come on and off the squeeze radar that I have a few times, but really hadn't seen a lot of big moves. Yesterday it jumped a bit, but today this is absolutely nuts. Just absolutely nuts. And again, not really seeing a lot out there in terms of news that would warrant this type of a move. So kind of fascinating. And they're continuing to push it higher here. Be very interested to see how this thing trades when the market opens. So I'm just posting this out there on social media because it's interesting and kind of nuts. I've said for a while now, 'tis the season to be squeezing. You've got tons of hedge funds that are just cramming into their favorite hedge fund hotel shorts. And these are stocks that are generally low quality. So when they pile in, and then there's a move in the other direction that's big enough, they have to exit. And Kohl's, with 50% of the stock short, these guys were basically betting on it going under. And I mean, if you look at the chart of this thing over the years, it's been a pretty safe short. So, here's Kohl's over, a weekly chart that goes back to 2021 summer. You can see it's been pretty safely in a downtrend with some, shortable pops. You could have reoffered there and really faded this thing into oblivion until it got down to just about $5 and change. Now we're trading almost 4 times higher than its lows. Now it's up. I mean, this is insane. It's up 80% now. Incredible stuff. Yeah, and Kohl's is just, the volume on this thing is already enormous too. It's got 20 million shares trading pre-market versus an average volume during the regular trading hour session of 8.86 million. And we can continue to see it making new pre-session highs. We're just less than 5 minutes away from the open. I'm just going to take a look at the short interest here. So here's another thing that's kind of cool. On FinViz, you can see the short interest. They have a float percentage chart on this subchart. This is part of their elite offering. And you can see how the hedge funds have been leaning more and more and more and more and more into this thing. In fact, there was a point recently where short interest was estimated about 53.15%. So it's pretty inevitable when something gets that crowded that you're going to have these episodic squeezes. It doesn't change the overall picture. I mean, the company's probably still in some degree of trouble, but at the end of the day, someone knows something. Something set this into motion. We'll probably hear about it after the fact, but you don't see this kind of volume and this level of squeeze with no catalyst. I can't find one that's publicly available. There's certainly not any real headlines that could or should be moving this thing the way it's moving, but we are where we are. So we'll keep an eye on that one. Another one that's moving pre-market that's interesting to me, AEHR. We've looked at this one before, and we can see it's also having a similar type of squeeze. Certainly not as dramatic as Kohl's, but AEHR up about 16.4% pre-market. And this is another one that's been a pretty popular short trade. It's got about 23.54% of its float shorted. And the longer term chart does look a bit constructive here. Again, just pulling this up in FinViz, you can see that sort of rounded bottom on the weekly, and now we're breaking out of that rounded bottom. So there's the momentum shift that's happening in this that's leading to a continuation of a squeeze. And AEHR is actually within the semiconductor space, just making a new pre-market high here. Big moves in AEHR. Wow, look at that. So let's do the math. 6.5 million shares short, average volume about 1 million. This is another one that could take probably about 8 or 9 trading days to cover. And pre-market volume on this thing is just about 435,000 shares traded pre-market. So it's already doing about half its daily volume before the market's even open. And market opening in just about a minute and a half here. Let's go back to Kohl's here for a second too. Just zoom out, see where some of this liquidity is coming in on the heat map. You can see there's some offers coming in overhead at 23 and 25. And there are folks selling this thing. Kohl's, you can see there's large red delta bubbles. So to give you an idea of what you're seeing on screen, if you're not used to Bookmap, these bubbles give you a sense as to which side of the trade is the aggressor. So these large red bubbles are showing you larger, more aggressive sell deltas. That's important to contextualize because even with the selling pressure we've seen so far, it has not yet had a big impact on price. And Ships asked, teacher on Bookmap, what does the little circle that says CVD mean? It means cumulative volume delta, and you can add this to your charts. It's actually a default you can add on the sub chart. So check out the response you got from the Bookmap team. But that's something to consider. I will say personally, I don't see a huge amount of value in CVD. I like to look at it versus things like icebergs and stops most of the time to get a sense as to if there's pressure and if it's going the opposite way of where the prevailing flow is. And markets are open here. And good morning, RS. Welcome to Meme Stock Mania 2.0, they say. Yellow line is the point of control, right? Yes, that is correct. So we'll just check on, wow, look at AEHR. That squeeze is popping as the market opens. You can see there is a really aggressive buy right at the open. And then we saw this thing soar even further, now up 27%. We first started talking about it when it was up about 16% here. It just popped up on my radar. I wanted to share it with you all as one of the squeezes that's playing out. And we can see some continuation in AEHR. Can zoom out a little bit. We see there's a rather large bid just below us at 21 and a significant offer up above us at 23. And we're going to bring up a couple more of these because it really is the season to be squeezing. I know I typically cover more future stuff, but right now there are so many opportunities to trade these crazy squeezes that are going on that I'd be remiss not to kind of show you what's happening and give you a sense as to how I identify these. So you might consider playing some of these if they fit how you trade and your risk tolerances. So we're going to add Children's Place. We're going to add a couple of these others that are showing up on my radar here this morning. There's also STOK Therapeutics. This one is also squeezing up higher here. It's about up 12%, short float about 25%. And also pushing to new highs, that symbol STOK. And we could see there's a pretty big offer overhead around 15, so that's where I would look for some resistance to potentially come in. And these squeezes keep showing up. There's more showing up on the radar. Another one that we've been watching for a while and we've been trading at TraderAid is FLNC. This one is now in the double-digit territory, so kudos to everyone that's taken this swing in FLNC. You can see it's really making some juicy moves this morning. I'm just going to quickly capture a screenshot of this. And FLNC, this one has about 37% of its float short. It's up another 6.64% this morning so far, trading 622,000 shares. And this is another one where it has one of those kind of beautiful rounded bottoms. Looks like it wants to try to break out of that. You can see the short interest on this one is significant. And so that gives us a pretty decent period of time to cover, because the short interest is about 24 million, average volume 5 million. So this one could take quite a while to cover. I mean, you're talking about probably, again, 8 to 10 trading days. Now, obviously, if the squeeze volume starts to surge, it could be a shorter period of time than that. But overall, this one also looks pretty interesting to me. And these are not companies that I'm looking at investing in. They are companies that I'm looking at simply trading because of the amount of hedge fund gross leverage that's near historic highs, with so much of their book leaning short into companies like this. Very crowded trades. And that's why I say 'tis the season to be squeezing, because these opportunities, they come around, and it's typically around summer and winter. Like midsummer, midwinter, you get these kind of, episodic short squeezes. It's almost like there's some seasonality to it. But the big, I think, metric to look at is hedge fund gross leverage and net leverage. If gross leverage is high and net leverage is low, and you see all these squeezy names with really high double-digit short interest, above 20%, lower floats, ideally they're optionable, you might be able to generate some ideas in those. There's another one that's starting to squeeze here. Let's check on the prior first. Kohl's retreating a little bit off the open. I was thinking maybe we'll get a little retreat, just because, I mean, moving up 80% pre-market is kind of insane. So we're seeing a little bit of a retreat now. Halt, it looks like, on Kohl's. AEHR continuing to push towards new highs and consolidating. Children's Place rolling over a little bit, but had a pretty big push pre-market. Then as the market opened, another push. Now we're rolling over a little on that. And Stokes Therapeutics just recently made a new session high. You've got a pretty big offer overhead, around 15 again, looking at that as a potential area of resistance. And FLNC also making new session highs. This one's a little bit earlier on in its squeeze, I feel like. Let's take a look at the broader market here. Right off the open, S&P dropped a bit down to this put wall. This is an area that's derived from options positioning using the SPX options visualizer tool that I wrote. And it's an add-on for Bookmap. It's a data feed add-on. You can learn more about it by going to traderaid.com/SPX. But you can see right off the open, had some heavy selling on the deltas, a little bit of tepid iceberg buying, and now we seem to be basing out just around making a bottom around that put wall area. So that is interesting, that options implied level of support once again coming into view. So some continuation selling, also probably from yesterday's close. Often is the case that not all of those orders are finished in the afternoon session. Often is the case that if there's enough order flow, they will roll over to the beginning of the next day. And I think we saw some of that in today's open. Another one that's moving fast here is Woof. That's Petco. And this is another kind of, company that's in trouble and highly shorted and getting a really big move off the open. I kind of regret not opening this one up earlier because I saw it pre-market on the scan, but I didn't necessarily think it was going to move like this. I don't tend to trade stocks that are below $5 too much. I have some investments as such, but trading these things has a different impact on your margin ability. They're typically not marginable. So if you're trading with leverage, these things can kind of soak up that buying power or selling power pretty quickly. That being said, however, the short float on Wolf here looks like about 25%. And so that gives us 22 million shares on a stock that does about 4 million daily. So maybe about 6-7 days to cover. And we do have some potential, resistance just overhead around $4, $4.20, and $5.50 being a really big level with over 100,000 shares on offer for Wolf. And this thing continuing to grind higher, new session highs on it. Another thing to be careful about these shorts is they can be halted, and you can have a pretty visceral reaction when they unhalt. Like maybe you have a really big squeeze, it jumps and jumps and jumps, it gets halted, and then after the halt, it starts falling precipitously. So one of the things to be careful of with shorts in general is that they can, and often do, have really sharp moves in either direction. So limiting time of exposure and position size is an important strategy to take into consideration. I wouldn't YOLO full port lotto this type of stuff. I mean, I don't tend to do that with anything at this point, but I know folks out there get real excited and think this is going to be the one that sets me free from my 9 to 5. Be real careful with that line of thinking. Seeing some interesting moves in restoration hardware. Evan is talking about that one in the chat room on Twitter or X or whatever we call it these days. I feel like that rebranding was a bit of a fiasco. And the CEO has left. But look at restoration. Nice look on this chart, getting a lot of buying pressure. You could see it right off the open with those larger aggressive buy bubbles. And now we're starting to get into an area where there's heavy offers overhead. So this move might start to slow down a bit as you see more supply coming online. And interesting, Kohl's is slipping more here. It's just unhalted, and we're seeing some more selling pressure. So, that's the other thing to take into consideration is when you see a real big squeeze pre-market, be careful following it too aggressively. And what I mean by a real big squeeze, I mean, this thing was up 80% pre-market. It's still up 60%, and they'll probably still see some volatility in both directions on this name. But when the stock is up that much pre-market, a lot of the move has probably already happened. So you're taking a lot of downside risk getting involved. Like if you bought that when it was up 80%, you've lost a good portion already. Let's take a look at some of these others. AEHR settling down a bit, had made a new high, got right up to an area of large supply at 22 and retreated. I typically don't like to see that on a momentum type of move. You want to see this contextualized by auction theory, that the buyers have the demand to take us through this supply. That tells you there's room for continuation. We saw the opposite. They kind of ran away from that supply, and there's some more supply building overhead now. So I'd be a little careful with this one here. Children's Place just kind of barcoding after the open. It had a pretty interesting pre-market move. Some of this might be driven by news flow on this one. Let's take a look. No, not really. Looks like it's just squeezy stuff. But yeah, it's just kind of chopping sideways here. Not a lot to get excited about yet on PLCE, but it is one of the ones that's coming up on that radar. It's up about 15% here, so it's probably already had most of that move. STOK Therapeutics hit a high, consolidating. That's also something you often look for it to have healthy consolidation. It's not really running away from supply here because we didn't get right up to it and retreat. We just made a new high and then started trading sideways. So still keeping this one on my radar for potential continuation. FLNC, similar look there. Hit a new high, consolidating, getting right back to that point of control. So watching that one as it trades $10 even, the point of control on this one, and pretty aggressive buying right off the open. And then we've got Petco also recently grinding to new session highs here, but there's a pretty large offer just overhead at 420. Looks like a lot of that $4 offer is likely to be absorbed here. Let's watch and see how it reacts. And let's go back to the S&P 500 here. So we can see that we bottomed out right around that wall of puts, started to make a pretty nice move higher, some aggressive buying involved with that same move, and there was a stop out. About 199 contracts stopped out as we pushed to the session high. Not exactly an exhaustive stop out, but that is where we started to lose some of this momentum, and it looks like we're going to kind of chop sideways here some more. Yesterday's open, we kind of barcoded, and what I mean is just sort of up and down 5-minute candles. We're kind of doing the same thing today in S&P and NASDAQ. So I'm going to pull up a chart just to show a slightly different view. So we can see that sort of barcoding effect this morning so far. The nice clean bounce off that put wall up into key 1 minus. That's a large area of negative gamma exposure, and so far it is offering us some resistance. So worth watching. Overall, though, this is a market that is just trying to find its direction after yesterday, where we cut below the 20-day moving average. And DNA continuing to squeeze. This was one that was squeezing yesterday. Seeing some more of that pressure. And Kohl's retreating pretty markedly here. Seeing a continuation of that selling just after it unhalted. So it's up only 43%, but important to contextualize that by saying it was up 80% earlier. So caution is warranted when these things move really big pre-market. It usually gives folks an opportunity to start reshorting it. Like if you were a hedge fund and you saw this thing up 80%, there's no catalyst, there's no reason for it other than maybe some of your other buddies getting pushed out. You'd probably say, oh, this is not a bad area to reoffer, get some short exposure on Kohl's after it's up 80% for no apparent reason. Let's take a look at AEHR. That one settling sideways is still up about 24% here, but it retreated from this reasonably sized offer overhead, and I said I didn't really like that look. And now we have more offers building overhead. So it seems like with this one, at the very least for now, that move is settling. It's probably going to retreat back to where we opened. Let's look at Lockheed. That was an interesting one. We had that big drop after earnings. We're just chopping sideways on this one. There is some, I guess you could say there's a little bit of dip buying happening here, but overall, pretty much locking in that loss. And we've got Petco. Petco had a pretty nice open, pretty powerful open. Went from about $3.30 to just under $4, and now just chopping sideways under that large area of supply. I still think this thing could move higher, however. The way it's reacting here, it's more like buyers are kind of regrouping than retreating. Take a look at Restoration Hardware. That was brought up in one of the chat rooms, and yeah, we can definitely see this one continuing to push towards session highs. I wouldn't say this one is just a short squeeze, but let's take a look. Oh, maybe it is. 22% of float short. Tiny float on this thing. 15 million shares and average volume of 1.32 million. That's pretty interesting. And this thing's been absolutely destroyed. It's trading more than 50% below its 52-week highs. Let's take a quick look at how short interest had evolved on this name over time. Oh, wow. So this is really interesting for Restoration Hardware. Look at the short percentage of float. And then after that big move, you started to see it really kick up. So I imagine that this data might be slightly delayed, but to see that big of a push up after that big of a move down, that's kind of a good recipe for a short squeeze. I mean, typically, when a company is setting up for a squeeze like this, it's when people get on the wrong side of the trade, they get real crowded, and you already have a move that's really brought it down to lower levels. I think we have to bring up a monthly to see when the last time that we got that low was. It was 2020. And there is some decent technical support from the highs back then. You can see where I'm drawing this line, that is kind of acting as a low here. So I wouldn't personally, if I was, in that space, this isn't a name that I'd be aggressively shorting into those lows where there's some potentially decent support and where the stock objectively isn't that expensive here either. So yeah, I get it. You got to hedge out your longs one way or another, and this was seen as an opportunity. But kudos to the folks that are on the other side of this trade longing it, because it just made another new session high, and this one could have some time to play out. With the amount of short interest that's on the stock, it could take about 5 or 6 trading days for it to fully flush out those shorts if there's a bigger squeeze event. So good job on that one, Evan. Hope you're long that and making some money. Meanwhile, S&P is trading to new session lows here. Let's take a quick look at that. Nasty. So we cut right through that put wall. Options flow is starting to come in. Overall, pretty balanced here, but we're pinging right back to gamma 1. These gamma levels, when they're really big like this, they tend to be somewhat magnetic. So let's see if we get stuck around this level. But so far, there is some real selling pressure coming in. That is the biggest sell delta candle that we've seen this session so far. Also, pretty decent stop run. 472 contracts stopped out by longs. And we are cutting right through gamma 1 now. Cutting right through a pivot level we had that had some confluence with that. So this is looking pretty nasty. And continuing to make new session lows here in the S&P 500. Seeing some very tepid iceberg buying, 100 contracts here, 100 contracts on this last move lower, but not deterring the selling pressure of yet. Also seeing put flow increasing on that most active put strike, which is where the new put wall has been mapped to. So we have some confluence between that and a bid just below. We'll see if we get some support down there, but if it keeps moving like this, we're going to find that out pretty quickly. And because everything always looks more exciting on a 5-minute chart, here's that same chart. That's a pretty dramatic drop. Obviously it's not that big of a move in the grand scheme of things, but if you're just trading this intraday, this is some more exciting volatility than we've been used to for a little bit. And that's another pretty aggressive sell delta candle. These are delta candles here on Motive Wave as well. And you can see we're just straight up dropping. So I'm just going to pop that over there on social for others to see. And Kohl's, you remember we were talking about Kohl's potentially getting faded off the open? It's only up 20% now. And I know 20% sounds like a lot, but this thing has just absolutely given back a big chunk of that move. See that really kind of, there wasn't a lot of aggressive buying pre-market. It was mostly aggressive selling. Perhaps that was one of our clues. Because as soon as the market opened, those sellers piled in and they have not given up. It looks like we're going to retrace this entire move in Kohl's. It's insane. I didn't trade this one either way. I was leaning more towards wanting to short it, but the way that it opened and started moving lower didn't really give me a lot of opportunity to get in there and do much. So for now, I'm just watching out of morbid curiosity. Let's take a look at the NASDAQ as well. Wow, that's pretty ugly. Making new session lows in the NASDAQ, getting right down to the most active put strike on NDX, cutting right through the put wall that had previously offered us support in NDX and SPX or in NQ and ES. Now, I would imagine that we could get a little bit of support just around the current level because this is the options implied low so far. Let's see about, yes, similar. Yep. Put walls move down here. It's around where the hot put is as well. So this is another area that could offer a little bit of support. So if you're lucky enough to get a solid short in this morning, this is not a bad place to take some profits. Also see a little bit more iceberg buying coming in here. 350 contracts. Another one that we've liked trading, ALB. This is one that my partner mentioned on Fox. We also mentioned earlier to TraderAid members about a potential opportunity in ALB as a long, now trading up close to $80 where there's a call wall on this stock, up another 3.27% today. This has been a great trade. Lithium space really starting to see more interest. Let's look at AEHR. This one retreated from those higher levels, made a retest, retreated once again. So this one's kind of buyers giving us a no confidence vote. Children's Place making lows, really couldn't find any direction with it. So we talked about not really wanting to trade this thing and now making new session lows. STOK Therapeutics also kind of getting dragged down with the broader market. FLNC, a similar look there. Petco just consolidating, but well off that $4 level for now. And Restoration Hardware doesn't care. It continues to push towards new highs. So that seems to be the real squeeze in the mix here is RH. Seeing a decent little bounce here in S&P futures off that level we talked about as potential support. That put wall and lower put strike confluence area. Similar look with NASDAQ. Getting a little bit of support. Doesn't mean this move is over, by the way. Just means that's an area where you could see a little bit of a relief and maybe an opportunity to reoffer. But it's pretty clear the primary trend for today thus far is lower. So I wouldn't be trying to play the hero here and buy intraday dips in hopes of an imminent trend reversal. More maybe take some profits, look for, higher levels to offer from. So S&P futures now down just a bit. NASDAQ futures down about 0.5%. And S&P futures here about flat. And Russell had a decent move pre-market here and even right off the open because it is one of those favorite short instruments from hedge funds. But even the Russell 2000 now moving quite a bit off of its highs, now up just about 0.1%. And if we look at the heat map, here, we can see there is some weakness in tech. So NVIDIA down about 3.54%, Palantir down about 4%, Broadcom down about 4%, Oracle down about 3%. Some real weakness in the bigger names. And even the industrials also being sold down a bit. Some of that in sympathy with Lockheed, I imagine, but overall, selling in that space and then rotation into safer areas like healthcare, utilities, consumer defensives, and even a bid in real estate and energy. So definitely a bit of a risk-off feel, even in the distribution of where there's money leaving and heading into. And in terms of breadth here, about even. 49% advancers, 42% decliners across all U.S. listed equities. The Dow, the only major U.S. index, still in the green by about 0.2%. So, folks, that's going to do it for me today. Thank you so much for tuning in. If you'd like to grab a copy of Bookmap at a 40% discount, visit TraderAid.com/bookmap. Scroll down to the special offers. If you'd like to check out the SPX options visualizer that is able to show where there's interest in flow and positioning levels, visit TraderAid.com/SPX. And if you're interested in what we're doing over at TraderAid, check out TraderAid.com. Thanks as always for tuning in. I'll see you next week, Tuesday at 9 a.m. Eastern, for the next episode of Back to the Futures with me, Markets and Mayhem.